If it feels like your portfolio has been run over this week by a Mack truck, well, I'm here to say two things. One, it may be Thursday, but the trading week is still young, so hang in there. And two, if you own a lot of software stocks, ask yourself why, because the sell-off is getting darn ugly. I'm Yahoo Finance Executive Editor Brian Sozzi, and this is Opening Bid live from Yahoo Finance's New York City headquarters. Here's what else is on my mind right now. Qualcomm's guidance stunk, and the sell-off is deserved. Company calling out weakness in the smartphone market in large part because of the global memory chip shortage. Execs say this dynamic could persist into 2027. An outlook like this should have been teed up by management 3 months ago. Bottom line here, come on guys, do better. The next tech giant in line for a reality check from me is chip player ARM Holdings. ARM also serving up some less than savory guidance, blaming memory chip shortages. Keep in mind that ARM designs the architecture that forms the basis of a large chunk of the smartphone chips in the world today, including Qualcomm's. That leaves it with the prospect of subdued royalty sales as mobile processor sales essentially stall. Similar to what I just said about Qualcomm, ARM execs should have done a better job guiding investors to these challenges. Instead, investors at both companies are left completely holding the bag today. And I know you want me to lay into Alphabet for shocking the hell out of everyone by calling out up to $185 billion in capex spending this year. Note, the street was around $120 billion on the high end. Here's what CEO Sundar Pichai had to say on this shocker.
Obviously, our capex spend this year is an eye towards the future. And you have to keep in mind some of the time horizons are increasing in the supply chain, etc. So we are constantly planning for the long term and working towards that.
And I said it was Pichai, it's Pichai. But I'm not going to lay into Alphabet for one simple reason. The fundamentals of its business are so strong that you could justify this level of spending. Check out these two random numbers I yanked from the earnings call transcript, which you can read for free now on Yahoo Finance. Just go to the Alphabet's ticker page. In October, YouTube viewers watched over 700 million hours of podcasts on living room devices, up 75% from a year ago. YouTube is dominating media consumption. Also, the company has 8 million paid seats of Gemini Enterprise, which it launched just 4 months ago, and the Gemini app now has over 750 million monthly active users. These are huge numbers that should have OpenAI quaking in their boots like this, just shaking, quaking. Opening bid roundtable, let's bring him in here. Lots to get to. Mike O'Rourke, JonesTrading Chief Market Strategist, alongside Yahoo Finance Senior Reporter Ines Ferre. Ines, I'm going to start with you here on this one. A lot of these tech stocks, these software stocks, getting absolutely beaten up. But there was a lot of, like I just mentioned, there was a lot of good components to what Alphabet had to say last night.
Great components to what Alphabet had to say. I mean, you mentioned some of them. The Gemini 3 app having 750 million users, their cloud growth. There was so much good in this report that they had. I mean, yes, the investors are concerned about capex. That's one of the concerns that may be weighing on the stock. But nonetheless, I mean, if you take a look at what Alphabet has announced, it's another blockbuster quarter when it comes to growth. So yes, there's this bifurcation, the software stocks that have been selling off, but then there's what's happening, but then you have to look at an Alphabet. And yes, and investors may be concerned about capex. That's one of the things that they're concerned about. They're also concerned about software and what it'll do to the industry. So I think there are some concerns within this AI theme that we're seeing. And the question is, is this a bubble? Is it too soon to be talking about these things? And what are some of the catalysts that could pop the bubble in the future?
And Ines, I didn't even mention my intro. I didn't want to create essentially a real-time research report. I didn't even get into what they were doing in the chips business, which is supporting, I think, that really strong cloud backlog that they served up.
100%. Their chip business, their search growth, their cloud growth, as you just mentioned. And you have to also take into account that this stock has done so well this past year. I mean, if you're looking at the Mag 7s and you're saying which are the winners, I would say that Alphabet is the one, and it's the strong one. And going into AI in the future, it looks like it's the winner in AI as well.
Mike, my man, good to see you as always. Always enjoy reading your work. Shouldn't this report by Alphabet, really good from top to bottom, really good earnings call, any way you sliced it, shouldn't this be the report that stops this sell-off in software?
Yes and no. I mean, I agree with both yours and Inez's take. Alphabet is the winner. Google's the winner in AI right now. They're the one to watch out for. The capex is just them defending their position. The line on the conference call that caught my attention was when the CFO said that about 50% of their coding is being done by AI agents. And to me, that just reinforces the alarm the market has had about AI agents over the past week or so.
Mike, that is a damn good point. I have to admit, I have to tell you right here, I missed that one. I did not see that. But yes, Inez, you know what? That brings up a good point. That essentially might fuel more of more selling pressure on these software stocks. It's so hard. I was talking to Tom Sozzi about this yesterday, to find the bottom, Inez.
Yeah, it's almost like this productivity is sort of feeding on itself, because you heard about this in their conference call about the productivity of engineers, but you also heard it with Meta as well, and their productivity growth when it comes to their engineers. And I think the Meta mentioned 30% output, an increase of 30% output. So I mean, to that point, yes, this shows that there is massive productivity that is coming from AI. So what does it mean for companies like the software companies? And I would also take it one point further, that you have seen some companies that have been announcing layoffs, and you have to think to yourself, are they cutting out because of AI and also cutting out because they need to fund AI as well?
It's a really good point. And Mike, amidst all of this software selling pressure, one stock that's doing well, maybe because they have no AI, it's Apple.
Yes. And they're partnered with Google,
Yeah.
right? They decide not to spend all that money on investment in capex, and then they partner with Google, who at the time, there were a lot of questions 6 months ago about the search antitrust and whatnot, because AI was going to displace them. And then all of a sudden they clear up the search issues with the Department of Justice. And now they have the best AI model out there right now. So they've really navigated 2025 extremely well. And that's why the stock has performed so well over the past 6 months.
Tell us what you would be looking for, Mike. Is there some form of a secret stock market indicator people need to look at and apply it to some of these software stocks? If they want to get in on some of these names that are down 30, 40% from their highs, like what should they be looking at?
So, I mean, the software space, especially over the past decade, where we went to the SaaS cloud structures, you have these very predictable annual recurring revenues that investors love. Investors love them. The private equity guys love them. So they've really piled into this space, but also that predictability has resulted in higher premium multiples for that group. So I agree with the take that not everyone's going to be disrupted here, and many of these, very large software companies are going to adapt and they're going to be fine. The problem is there are new risks out there, that there is disruption risk to some members. So that risk premium has to, increase, which in turn means the PE multiple has to come down. So over the past 25 years, the S&P 500 software group has had an average PE of about 27. I mean, the past few years, it's pushed 35 and 40. So I think we need to get down to that level for investors to really start looking. And again, you have to be careful, because, I mean, I think the key takes out of the Mag 7 earnings in the past week is Google has overlapped with both Meta and Microsoft. And Meta and Microsoft, you see two different reactions. And Meta, where they win, is AI is very synergistic with advertising, and that's obviously Google's bread and butter business. Whereas Microsoft is falling more into the camp of they're looking at investing in AI agents because they're worried about, or their SaaS growth, their cloud growth was a little weaker. So it's an interesting dynamic there. But I think the whole group needs to just derate to a lower multiple, and then investors start looking again.
Mike, as someone that is looking at the plumbing of the market, what is more important to you right now? Updates from the likes of an Anthropic or even an OpenAI on what technology they are working on or not working on? Or is it economic data release?
Well, right now, the economy seems to be in a good place. We have what looks to be good GDP growth with, as we talked about in this conversation, AI is driving productivity. So I think the inflation numbers are going to continue to trend down. So it's more, to me, it's a valuation story. I think we've been in a bubbly environment, or a bubble environment to say, and I think you have to be very selective in the stocks you're looking at. What I'm seeing recently is Investors are now hearing this AI disrupt risk. They're rotating to consumer staples and transfer things that have a real economy element to them because one, they've been underloved for years, and two, you're stepping away from this volatility and this disrupt risk.
Inez, outside of software, my day started looking at, I forgot who it was from, full disclosure, I forgot who it was from, bullish note on Coinbase. And that is a tough call, Inez, to be making on a day or really after a few days of massive selling pressure on Bitcoin. Similar to software, I can't see where the bottom is here.
No, it's difficult to tell where the bottom is, but I will say that 10X Research, which is one of the firms I've been following, and they've been pretty spot on over the last year. They are expecting a bottom to come sometime this summer around FIFA, around the World Cup. And
this summer? There might be 25,000 before that, Inez. Holy.
Yeah,
wow.
That's because they talk about the massive amount of holders in Bitcoin ETFs and some of these holders that would have probably sold at more elevated levels, and they are underwater with their holdings right now. And you are looking at Bitcoin that breached about 70,000 earlier. It's just above 70,000, but the support was really around 73, 74,000. So the idea is that if it breaks that support, then you are looking at more selling pressure ahead. And I mean, this is one of their calls is pretty scary. I mean, if you keep selling, they're saying that it could go down to around 50,000 by the summer, and that would be sort of the buying opportunity. Of course, there's little mini rallies within a bearish trend, but nonetheless, even the bulls are talking about this bearish trend that you are seeing in Bitcoin right now.
I mean, Mike, why not Bitcoin 10,000? This is not like Bitcoin is not like a stock that's generating cash flow. Why not 10,000? Why not 5,000? And would you call what we're seeing, is this a new crypto winner?
I would definitely call it a new crypto winner. I believe MicroStrategy's president called it a crypto winner a few weeks ago or a month ago or so. But Brian, I agree with your point. There is no way to fundamentally value Bitcoin. And as far as the action of past year, obviously the election was a big catalyst as an asset, and there was a lot of people popping into the space. But the digital asset tree companies, all the MicroStrategy copycat out there, they're the ones they were the prime buyers driving up the prices of cryptocurrencies in the past year, and they're selling shares of their stocks to the public, diluting their shareholders in order to buy this crypto. And what's happened now is they've proven that they had no expertise in their purchase prices because they're all underwater on those purchases. So I think the market's going to stop funding these purchases. So the major player, the major buyer in the market is not there anymore and probably should never come back.
Inez, I meant to send you a Slack on this one. You got to check out those Costco sales that came out overnight. I mean, a hell of a month for them. I think January, their same-store sales were up 9.3%. I didn't, as they say, double-click to see if it was driven by gold, but I'm going to do that after I get off.
Yeah, I mean, Costco is one of the winners when it comes to, and they've been, the company is amazing, and in this environment as well, in this consumer, the sort of K-shaped economy environment as well that we're seeing, this is what, they're one of the winners. By the way, B of A just came out also with a tidbit note on the K-shaped economy, basically saying that it's here to stay for now, and that the One Big Beautiful Bill is good for higher, middle, and higher income, but the lower, not so much for the lower income. So yeah, consumers are still wanting to buy deals, to buy in bulk, and those gold bars, look, even when gold was declining, you still saw people going to the dealers to buy.
Love me some Costco. That's where I get my beef every weekend. All right, big thanks to Mike and Inez. Appreciate y'all. We'll talk to you soon. All right, it pays to spend $1 billion to buy a hot cosmetics brand. More on this next with my power player guest, the CEO of E.L.F. Beauty. We'll be right back. The power of Hailey Bieber to drive the cosmetics industry seemingly has no bounds. That's one of my thoughts when running the numbers on E.L.F. Beauty's latest quarter, which was powered by the company spending $1 billion to buy Bieber's cosmetics brand Rhode last August. E.L.F. is out jacking up its top and bottom line outlooks for the year because of momentum with Rhode, but also because of new shelf space wins at Walmart and Dollar General. Tarang Amin has been in the CEO seat for E.L.F. for 12 years. He joins me now for a segment brought to you by EY. Tarang, good to see you as always. So take us through this quarter. You know, running down that earnings call that you guys had, I really think this was a Rhode-powered quarter. What are you seeing with that brand right now?
Well, we delivered an amazing quarter. Our net sales were up 38%, our adjusted EBITDA was up 79%, and our namesake E.L.F brand continued to grow market share, up 130 basis points. This marked our 28th consecutive quarter of both net sales and market share gains, and so we continue to have incredible momentum. And as you said, Rhode has been phenomenal. Rhode launched back in August, September in Sephora North America. It was the biggest launch they ever saw, continues to be their number one brand. We more recently launched in Sephora UK. That launch was 5 times bigger than any other launch Sephora had ever seen. And next week, we're entering Mecca in Australia and New Zealand. So the brand has just unbelievable momentum, and we're really proud of it.
Why? Why that momentum?
Well, I think it really goes back to Hailey Bieber and her founders and the vision they had of one of everything really good. So it's an incredibly curated lineup that really ties into her lifestyle, and consumers can't get enough. I mean, I've never seen a brand that's gone from 0 to 212 million in net sales in less than 3 years, DTC only, with only 10 products. And one of the things that I noticed when we were doing our diligence on the deal is consumers will be willing to wait out for one of their pop-up events 14 hours overnight for an event Hailey's not even at. They're buying into the entire lifestyle, and obviously they're buying into the incredible quality of those products. So couldn't be more excited about the momentum we have with Hailey, but also across our entire brand. We have 4 of the fastest growing brands in color cosmetics and skincare, and E.L.F Cosmetics, E.L.F Skin, Naturium, a brand we acquired 2 years ago, the clinically effective biocompatible skincare brand, and obviously Rhode. So we have great momentum across our entire portfolio.
Is it part the strength in that brand, Rhode brand? Does it reflect her social media following? What does she have? 56 million followers on Instagram alone. So if she puts something out to that following, they pop up wherever those products may be?
Well, certainly that's part of it, but it goes much deeper than that. The quality of the products are just absolutely terrific. And so, there are a lot of people that have a lot of followers that haven't been able to translate that into a viable, successful business. So, I tell people all the time, Hailey is certainly a celebrity, but she's one of the most thoughtful founders I've ever met. And every instinct that team has had has been great. And our approach on acquisitions is we bring on the entire team, we see what else they need help with, and we continue to support them. And that's been a winning formula, not only for Rhode, but also for Naturium. And certainly we continue to propel our E.L.F brands.
What does the product roadmap look like for Rhode? Like 3 years from now, what categories are there in? I imagine you have to launch more categories to get value for that investment the team made.
Well, I think there's still a ton of potential in their core category of skincare. We now have 3 of the fastest growing skincare brands in Rhode, Naturium, and E.L.F Skin. So we see a lot of potential there. Rhode also has these hybrid makeup products as well as accessories and lifestyle products. So the brand is very much a lifestyle brand. There are multiple categories available to it. But what I love most is just how disciplined and thoughtful the brand has been in terms of its product rollout. You do not see this proliferation of SKUs. It's a very tight lineup, and you'll continue to see that. We most recently launched a face mask and a lip mask that's off to an incredible start. So you'll see a good cadence of innovation. Certainly that's something E.L.F is known for, but you'll also see that same level of care and discipline in terms of what we roll out.
Love me a good face mask. That is all true. I want you to react to this one, Tarang. This is a report from J.P. Morgan this morning. They said this, quote, "The much slower core business growth is concerning." How would you respond to that?
Well, I would say our core business is incredibly healthy. If you look at our consumption in color cosmetics, it was up 8%, double the category. If you look at E.L.F Skin, it was up 16%, again, double the category. So this is just a question between shipments and consumption. Last year at this time, we had a massive rollout in Dollar General, 11,000 Dollar General doors. We also picked up 50% more space at Target. We now have 20 feet at Target. And so we're overcoming that pipeline shipment. So that's the reason why our shipments are lower than our consumption. But my experience is over time, shipments and consumption equal each other. So the more important thing is to continue to look at our strong consumption growth and market share gains. That's a better indicator for the long term.
The pace that the core business is growing coming out of this quarter, do you see that continuing into the second half of this year?
I definitely, we haven't given next year's guidance, but this has been consistent. We've grown 28 consecutive quarters with industry leading consistent growth. And I don't see anything that would change that. We continue to build share. We continue to bring more consumers to our brands. E.L.F is the number one brand by far amongst Gen Z, Gen Alpha, and millennials, and we continue to pick up more consumers. So I just see the strengths that we have in terms of our value proposition, powerhouse innovation, and disruptive marketing engine continuing.
Lastly, Tarang, I've talked to a lot of consumer CEOs this week. I have PepsiCo CEO to kick off the week, talking about affordability challenges. They're cutting prices. You just mentioned those $11,000 General doors. What are you seeing in those Dollar General doors? Are you seeing fewer trips down the cosmetics aisle because that low-income shopper is still, they're really under a lot of pressure?
Well, I think, the thesis for us going into Dollar General is they serve the underserved. A lot of the places their stores are in rural areas where the next store, less than 20,000 people in a particular market, 20 miles away from another store. And so our hope was that we bring the best of beauty to those consumers, and that's exactly what happened. We're the most productive brand by far that Dollar General carries. I think we brought, people who bought E.L.F at Dollar General, 60% of them new are to buying cosmetics at Dollar General. And we're also picking up a number of new consumers, and we continue to see great momentum. So I think this ability for us to bring the best of beauty with our incredible values really resonates across really all income groups.
Tarang Amin, always good to see you. E.L.F Beauty CEO. I'll talk to you soon.
Okay, thanks so much.
Appreciate it. All right, opening bid today was a warm-up for my rest of the day. I am off to do some podcast taping and a little promotion for my new drop on all podcast platforms with World Economic Forum founder Klaus Schwab. This is a must-listen. But at the 3 p.m. hour, you'll find me back on live from the New York Stock Exchange floor with the CEO of Bob's Furniture. A big IPO day for a company that I recently bought all of my furniture from. My couch is so darn comfy. Thank you, Bob. Or I should say Bob's. Catch you soon. Julie Hyman is next.